Good afternoon, traders, and welcome to our weekly stocks outlook for March 9th, 2018. Hope you're all having a great week in the financial markets. And as usual, we're going to take a look at some really great opportunities throughout the markets. Now, we're going to take a look here at Autodesk. So we got technology, a couple of pharmaceutical stocks, energy exploration, so some basic materials there, and also utility space. But let's go ahead and start out here with Autodesk, a very exciting company. There's a lot of very interesting things in the technologies. But what we have here as far as the stock price goes are daily bars and candles. And that's a very important aspect to understand about this technology. Is it's working off of end of day data and then forecasting forward. So you have all the information before the market starts trading. But here you can see after the close of this candle here on February 15th, you have a crossover between these two values, this black line on the chart and also this blue line. Now, the black line that you see there is what's known as a simple moving average. So a very common technical indicator. And how it works within this format here is it's really a summary of what's already occurred in a given market. It's just really averaging out the past 10 or 15 trading days together, smoothing out that data. But what we're able to compare that to is a predicted moving average. And so for this value to be generated, it's utilizing the artificial intelligence found within the VantagePoint software and forecasting those average prices forward. So when you get a cross between these two values, it's essentially indicating that the trend is expected to move higher. That prediction has moved above the actual moving average. In addition to those predicted moving averages indicate to traders what is the trend direction, should I be long or short, you're also provided an extremely accurate indicator at the very bottom of the screen. And this is a extremely accurate, upwards of 86% accurate indicator that's looking ahead 48 hours, or you can think of it as 2 candles ahead, and letting you know of short-term strength or weakness in the market. So if you know the overall trend direction and you also know if there's short-term weakness, you essentially know when to be buying on dips. But really lastly, to really round out the entirety of this predictive forecast, you're also provided a predicted range before every single trading day. So literally a predicted high and predicted low so that you can go in and execute your trading strategy and really have very efficient and solid entries into your markets and into the trade. So if we go ahead, we'll bring up the predicted moving average, and we can see from this point, we'd want to be getting long the market and then look towards those predicted high and low levels to determine where do we want to be looking for entries in a up moving market. And so you see how this works out where you get a couple days of sideways action, but your predicted highs and lows are always adapting and really adjusting themselves to get you the best intraday price possible, but keep you involved in the uptrend. As long as that blue line remains above the black line, you want to remain a buyer in the market. And, this is just a really good example on this trading day here where, it's telling you you're going to get a couple days of weakness, but the trend is still very much to the upside. That blue line, that predicted average, is saying the trend is still up. And so you get this adjustment and understand, look, the market's going to trade down here. It's a great opportunity to buy on that dip and get involved in the upward move. And we can see that we've gotten a big gap up in the market, a obviously really nice move here. But this is what allows traders to not only get a short-term entry, so a really good intraday price, but also participate in a much bigger move. You see this market's up 23, almost 24% just in the past 14 trading days. So while a lot of markets haven't been doing that well, and we'll cover some of those markets where it's been appropriate to short within the downtrend, some really great opportunities really all throughout the markets. But you really need those tools to help you adjust, and that's really a big part of this forecast here with the VantagePoint indicators, these predictive indicators. Here's AMAG Pharmaceuticals. So really the same logic here of understanding, okay, well, the trend is now up. We want to get involved in that upward move. Our neural index very strong over the course of really this duration higher. You see you get some sideways action once the neural index goes negative, but the trend still very much to the upside. So as a trader every day, you'd come in and say, okay, well, let's look towards those predicted levels for good buying opportunities into this upward trending market. And you really see how that works out, where you're getting the best part of the move as far as the trend moving up, but also getting very good intraday entries so that you can buy up the market, take some short-term profits along the way, but also participate in that, much nicer longer-term trend. And as we look at this market so far, really nice move higher where the market's up over 50%. So, not only can you take that chance and get in at a predicted low level, again, that good intraday, very efficient entry price, you can go ahead and take some short-term profits at the predicted highs. But as long as that blue line remains above the black line, you want to be involved in that directional move, that directional trend. So huge opportunity there in AMAG Pharmaceuticals, 50% move higher in just the past 16 trading days. Here's Newfield Exploration Co. So almost the complete reverse of you see all the way back here in the midpoint of January, getting a crossover to the downside, indicating, okay, well, this market's in a downtrend. If you want to look to trade it, you want to use that guidance from the Neural Index and the predicted highs and lows. But clearly, over the duration of this move, the market's in a downtrend. So we, of course, bring up those predicted levels, and we can see how this works out. In bearish markets, you're going to get rallies higher, usually pretty quick rallies higher, but you want to be prepared to go ahead and short when the market gets up to these predicted levels and have really good guidance moving over the course of the trade. So, it's not just about taking a position up here and holding on one position. You're going to be able to manage that position over time and really understand where the market's likely to trade so that you can, again, be very efficient with those trading decisions and really stick to your guns. So stick to that game plan, ride the trend as long as the forecast remains to the downside. And you see it 32% move lower over 34 trading days. So, almost any trading style, you understand, look, you want to get short at the predicted highs, target the predicted lows, and you're going to see a lot of success as that market moves lower. And this is a really great area where, again, you can, hedge your portfolio. You've got the market moving lower over here. You have other markets going up upwards of, 20, 30, 50%, and really spread things around the market that way. Here's Progenics Pharmaceuticals. So, again, seeing a lot of bullishness and upward crossover predictions coming through these pharmaceutical stocks, and you can really pinpoint, okay, where do I want to look to trade in the market? And since you have those predicted high and low levels, you're not going to be chasing down the market. You're really going to understand before the trading day occurs that, okay, it's time to go ahead, start taking positions, put in those limit orders, and look to get involved in individual trading opportunities. So again, we'll bring up those predicted high and low levels over the course of this trade. Really see how this works, dipping down to this predicted low, moving lower here. You see this really great adjustment from the predicted high and low telling you, look, you're going to get a move lower. You see that slope of the predicted low coming much lower. The market certainly gets very close to these levels before we eventually go higher and that trend resumes. So you see about 1, 2, 3, 4 entries there involved in that upward move over the course of what's been about 20 trading days, it looks like here. But of course, we'll take a look at the duration of this and say, okay, well, this has now been a move that's lasted over 15 trading days, up 30%. So, it's not just about getting into the market at these predicted highs and lows, but just understanding that, look, when these trends start to take off, you really want those good tools so that you can be involved in the 30% move, but not have to run extremely big stop losses. You have a very good guide and also a guide that's, adjusting and adapting to those changing market conditions so that, again, you can be prepared and adapt your position and your stop losses accordingly to make sure you get the best piece of that a big move there, about 30% to the upside. And also SCANA, we've seen over the past couple weeks now a lot of strength in utilities. So much like the pharmaceutical stocks starting to all turn up at the same time, utility stocks doing a very similar thing here. So you see you get this crossover to the upside, Neural Index up at a 1, but you get a little bit of a warning of some short-term weakness in the market, but that predicted moving average still well above the actual moving average. So your directional bias would remain to the upside, and you'd be looking to, again, buy at predicted levels. And, this is just another great example here of, we see if we look very closely here, the predicted low of 36.34, the actual low of 36.28, and you're really prepared. You've got a move to the upside. You got some short-term strength and saying, look, expect the market to come down to these levels. And you see pretty much almost immediately after hitting that level, the uptrend resumes and a really nice move to the upside there. So over the course of this trade, a pretty nice move so far. But we can see, over a pretty short period of time here, about 11, 13 trading days or so, market already up 10%, 12%. in utilities. And we're seeing this a lot of these markets were beaten down, and we talked about them going lower and lower, and there were great opportunities to short. But when they turn around, you of course want to be prepared. And it doesn't take much time and a move when you're coming from these depressed levels to really see a over 10+% move in just a matter of 13 trading days, under 3 weeks there, as far as the daily bars and candles there, just going back a few weeks. So really great opportunities all throughout the markets. There's a lot of increased volatility over really since the beginning of February. Just seen a lot more volatility in the markets, and it's opening up some really great trading opportunities. So, but thank you guys for watching. That's all we have for today. Be sure to tune in next week, ask any questions or comments, certainly in the video that you have. And once again, this has been our Hot Stocks Outlook for March 9th, 2018. Best of luck. I'll see you all next week, and bye for now.